for more on the changes to the MSCI indices, we're joined by Dan McClory. He is the Managing Director and Head of China at Burnham Securities. Dan, good to see you as always.
Great to see you, Michelle. Thanks for having me on the show on such a momentous day for Chinese financial market reform.
And you know what it really is with the MSCI adding 14 U.S. listed Chinese stocks to its indices, including, of course, the big one, the MSCI Emerging Market Index. You say it's momentous, which it is. But Dan, isn't it surprising that this hasn't happened yet? I mean, what do you make of the move and the timing of the move?
Well, I think the timing, combined with China's admittance to the special drawing rights as a global currency, is quite a potent combination. So we're finally seeing global market recognition of the rebalancing of China's economy. And I think the initial inclination, which was to try to focus on A-share listed companies, which, as we've already heard, has been met with some degree of delay, has now refocused on those that are already listed in the U.S., which is seen as being more accessible, that's for sure, perhaps somewhat greater disclosure, and even a safer way of investing in the Chinese economy. So I think its time has come, and again, I do believe this is a very, very positive development.
Dan, a lot of money at stake here. About $9 trillion tracks the MSCI indices. Now, some are forecasting that the rebalancing will now mean billions will flow into these shares. What is your expectation there?
I think, Michelle, it's in line with what we heard earlier on the show. I've heard as high as over $100 billion. That's from Makori. I've heard Goldman talk about $90 billion. But remember, this is going to take place in two distinct phases. Half of these companies are going to be admitted today, the other half in June. And MSCI has done that to stagger these liquidity inflows. And quite frankly, some of the selling and buying that's going to have to take place. It will also result in rebalancing some of the country weights for the index. So countries like Brazil and Russia are going to find themselves somewhat rebalanced out of the index.
Well, most of the companies are tech stocks, Alibaba, Baidu, JD.com. And this is pretty significant because it speaks volumes about China's tech sector. What's the message that it's sending?
Well, the message is that the government's being successful with its stated reforms of moving from a industrialized, manufacturing-oriented economy to technology, services, and consumption-oriented. That's first and foremost. But number two, these are major, soon-to-be global names that the world is going to hear about as a result of their debut in this index. We've already heard about them in the U.S. We now recognize Baidu, we recognize Tencent, we recognize Ctrip, we recognize Alibaba. But now the rest of the world is going to start hearing about some of these iconic Chinese brands that really haven't gotten as much global exposure as they would have.
Dan, is this a good time to be buying these stocks now, or have you missed the boat?
Probably not. Those stocks, and I'll talk about Baidu, Ctrip, and Alibaba, they were up between 30 and 50% in the month of October alone. The market clearly understood that this change was underway. They've positioned themselves. So I think it's time to watch and wait and play this out. Long term, these are good buys, but if there's any temporary bump or pop as a result of being included in the index, I think that's already passed.
Well, Dan, as we've been discussing, this could be a step to bringing Chinese A shares in because so far Chinese stocks traded in the yuan are not part of any MSCI index or any global index. Chinese shares are represented only through Hong Kong. The entire Chinese A-share markets, Chinese companies that list on the Shanghai Stock Exchange and the Shenzhen Stock Exchange, not included anywhere. So is this finally a step towards adding China A stocks? What needs to happen?
It most certainly is. And I think it's a great preliminary step. It's a way to do it on a safer and a more accessible basis, as we talked about earlier. And ultimately, we heard that when the Shenzhen Through Connect happens to Hong Kong, that's going to be a precursor of perhaps including Shenzhen as well as Shanghai listed stocks in the index. But for the time being, what we're seeing is a way where stocks are traded in the world's largest pool of liquidity, New York and the US, for them to start to come into the fray. It's absolutely a huge understatement to say that the world's third, and that's Shanghai, the world's third largest exchange by market capitalization, and the fifth largest exchange, which is Shenzhen, have no representation in global indices. It's ultimately going to happen, I predict, sometime towards the end of 2016, and this is a way to going to make money and then transition into the A shares.
All right. Thank you so much. We're going to have to leave it there. Dan McClory, Managing Director and Head
You're
of
welcome.
China at Burnham Securities.